We're talking about the National Association of Business Economics survey. What are they saying?
And they do it every quarter. So, they're on top of it, and we can see changes that way. And what they're seeing is that the pessimism has lessened, I would say. Some of the people are getting so optimistic, but definitely, if you look at what they see in their latest July survey, 71% of the economists they surveyed see 50% or less chance of recession. In April, the economists were split evenly on recession odds. So you can see this is a better. It was 50-50, now it's 71%. And now in July, 1 in 4 put the recession chance at 25% or less. So what are they looking at? They're looking at the fact there's a strong labor market and also inflation's coming down. That's the kind of thing that makes businesses do better, feel better. Remember, these are economists. These are chief economists at U.S. companies. And also, they're seeing improved profit margins. So all of this is making them feel like, well, the economy may not be roaring, the Fed may be raising rates, but we're definitely looking at an economy that has a better footing now. And in fact, looks maybe like the survey is suggesting that economists don't see recession now as inevitable as they once did. The soft landing, though, a great Bloomberg story today saying it's going to depend on the Fed's tolerance for inflation. Will the Fed be willing to let inflation stall out around 3% year over year? Will they insist on getting it down to 2% year over year? That's the kind of thing that's going to determine how many more rate hikes there are. And that's the kind of thing that could make the economy, if they have to do more, get weaker. And that's the kind of thing that could raise those recession odds again, Heidi.
Of course, the Fed starts its two-day policy meeting tomorrow. A hike is widely priced in. Our previous guest, Jeffrey Schultz, said that this is going to be a pretty boring meeting. Is it, though? What's next?
Well, boring in the sense that it just seems there's been so much telegraphed. It's been signaled a 25 basis point hike coming back from the June pause. OK, this makes sense. There's still more work to do. That's what we have heard. But what we do see right now is that markets are betting this is the Fed's last one. One more. Investors aren't looking for the cuts yet, but they're not looking for rate hikes. Inflation's coming down enough. That's going to be the kind of thing to convince the Fed to go meeting by meeting, look at the data, but not make a move. Now, Jay Powell has said, look at the June dots, at least 2. The consensus is at least 2 more rate hikes this year, and he has emphasized that over and over. Will the rest of the Fed officials' minds be changed by that? Let's look at inflation, because that's going to be a big determinant of how much their minds do or don't change. What we're going to look at is the Fed's favorite inflation gauges. Now, you can see the blue line. That's the PCE deflator. Look how well it's improved. It's down to 3.85% year over year. But the core, that takes out food and energy. It's still up over 4.5%, 4.6. That's the white line. Fed funds is above 5.225 above both of those lines. It's restrictive now, but that's something that could give the Fed pause. So Bloomberg Economics is saying they do see the Fed hiking to 25 basis points, a 25 basis point hike to 5.25 to 5.5% on Wednesday, and then somehow signaling a pause at the next meeting. That perhaps just that's what they said back in. I guess the April meeting when they were talking about, the May meeting when they were talking about what they might do in June. And their baseline is interesting, Sherry, because they see rate cuts starting in the second quarter of next year. Although they say there's risks like El Nino. What if El Nino continues to be so hot? What if food prices go up? There's all kinds of what ifs. So it's a little too early for the Fed to signal that. But I think that this sense that they're going to open the door maybe wider to we just have to see what happens at this meeting. And that's going to come from Jay Powell's messaging at the press conference.